3, 2, 1. Let's start. It's going to start now. 3, 2, 1. Boom. Alright, huge apology to everybody. You should have audio now, you should have video. I really am an audio-video technology expert at this point. I've memorized the 17 steps to actually get this to work properly, and I believe going forward this is actually going to go off without a hitch with my new super-duper powerful computer. So what I wanted to talk a little bit today about is a little bit differently than we normally do the in-play stuff. I want to talk about the idea of patience, and of course it's almost a cliche in the trading world. We know we have to be patient for our setups and let the plays develop and things of that nature. But in a market that is more volatile and is moving up and down, sometimes we start to become a little bit impatient and we don't wait for our setups and we dig ourselves in big holes, and when the setup actually occurs, we can take ourselves out of the game. And so with that in mind, I'd like to talk about, right now we're looking at the SPY chart from the last 2 weeks, and just talk about things setting up and how nicely they've actually set up the last couple of weeks, and just really being patient with this setup. And if you were, you could have done quite well in these trades that offer themselves to us. Looking at this in the last 2 weeks, going back to last Wednesday, we had a really nice down move in the SPY that set up, and we can see that there had been a downtrend the prior afternoon. We came off, we were fairly weak, we consolidated for several hours, and if you weren't patient here, and every time the market looked like it was going to break and you were all in, you cost yourself a lot of money and maybe took yourself out of the game for this nice meltdown at the end of the day. And so in this situation, what I generally like to do is, if I see the market's weak and it's consolidating at the lows, if I think there's going to be another down leg, is I will go in with a quarter of my position, 25%. So let's say I ultimately wanted to have 2,000 shares in the SPYs. I'd go short 500, and I would wait for another trigger to go into my second quarter, and then finally, when the trade was really working, I'd go into my final piece. And there's a reason why I'm not getting into specifics yet on that. I just wanted to introduce you to that topic. We'll get to that when we look at yesterday's price action. So we saw that nice meltdown at the end of the day. There was the huge gap down the following day. And this was quite a move in terms of percentages for a couple of days. One of the things that we saw at the end of the day, on this day right here, was in the final hour again, there was a pretty big move. We made a new low at around 111.30, and we went up to the morning resistance of 113.40, so there was about a 2-point up move into the close. So at this point, I said to myself, hey, this kind of reminds me of what we were seeing a few years ago back in 08. At the end of the day, the flurry to sell at the end of the day, the flurry to buy. Notice the flurry to sell, much more exaggerated downside move. When you become more experienced in the market, I think what you start to see is when things start to pick up momentum on the downside, people step out of the way a lot more quickly, and those moves tend to be more exaggerated than the rallies to the upside, especially when big picture you're in a weaker market. So I took note of this after this Thursday move into the close and said, hey, end of the day, if I see the market break down again like I saw on Tuesday, or if I see it break to the upside above a key resistance level, that's where I'm going to be most aggressive right now in the current market conditions. Following day, we had a tight range day. We didn't really do it. It was a nothing day, basically. But then we came into work on Monday, and we showed a little bit of strength in the morning. We came down to Friday support, and we consolidated for about an hour in the middle of the day and started to move higher. And when we took out the morning resistance, we ripped up about 1.5 into the close. And so this was an example that if you were patient and you waited for the setup, you waited for us to take out the morning highs or the morning lows. See, we never took out the morning lows, so that setup never occurred. We took out the morning highs right here at 115. It was a really nice move to the upside, and I thought Mike did a really nice job on the desk that day of communicating to our traders, get long, find some things to get long. One of the things that we always stress to our traders is once we know what our key inflection points in the market is, before we get to those inflection points, whether that be on an upside break or a downside break, have a few names to go to, put on some small positions in those names, and see which ones move the most, and then put your energy on those in terms of where do you want to allocate your capital. So that brings us to yesterday's price. Actually, it doesn't. It brings us to, it does bring us to yesterday's price action, and this is where I'm most focused. So we're in a very weak market overall, right? We go back over the last 3 months. We had the huge downtrend. We attempted to break out of this range. Then we had another quick down move to the bottom of this range here. Overall, weak market, wide consolidation range, but the last trend in the market was down. And so we really want to be patient in terms of looking for those down moves at the end of the day. Now, what I think really catches some people the wrong way is everyone sees how weak the market is, and we see that we go down to 112, and then the next day we go up to 116 and change, and you want to be short. And the problem is that we don't know, are we going to stop at 119, are we going to stop at 120.50, or are we going to stop at 122 where we failed 2 weeks ago? So what you really have to do in these situations when you know the market is overbought and you're looking to trade it on the short side is wait till the momentum turns in your direction, and this is where patience comes into play. So if we look at yesterday's, I'm going to pull up a 2-day chart here, and I'm going to talk about how we wanted to trade this and save ourselves a lot of stress, save ourselves a lot of agita. So here we go. Starting with yesterday's pre-market, we had a very nice uptrend. We got up to an area which I thought this 119.25. I thought that was a possible failure price, and then my next price was 119.60. And that's kind of, these were some spots where I thought the market would fail. If I think the market's overbought and the risk reward is no longer good for me being long the market, what I'm going to do is look for spots to nibble on the short side and then get more aggressive as the trade starts to develop in my favor. And just to give you an example, right on the open, we spiked up very quickly above 119 and came below, so I nibbled. I put a 25% position here on the short side. Came back down pretty hard, about a half point. We supported around this 118.40, so I covered some, and then I stopped myself out of the rest. That was a small winning trade. Then later in the day, we popped up to this 119.25 twice, but I was off the desk. But the way that you handle this trade is each time it comes up to your resistance area, and if you think there's downside in the market and you're overbought and you want to fade this shorter term trend because you believe the longer term trend is still down, which is actually correct, and we did move a lot too quickly, is you put on 25% of your position. So for example, if your ultimate goal was to be short 2,000 SPYs, you would put on 500 shares here at 119.25, and then when this trade started to work, let's say below this support area right here, the prior low, which was 118.67, that would be a spot where you would add an additional 500 shares. Now in this case, you're short 500 shares here, you add an additional 500 shares if it breaks below this level here. We notice it came down here, but immediately supported. So you would cover that extra 500 shares right away. As it started to tick back up, you might even take some of that initial 500 shares off in the middle here somewhere, and then probably stop yourself out of the rest above this line where you initially got in. And so what would happen is the trade would actually either be a scratch or a slight gain. Then the market would make a new high. In this case, I actually tweeted about this. I had an offer up at 119.58, which I did not get taken on for a quarter position. But you put on your quarter position up here, and then you would add to a quarter of your position. Again, when we take out this 118.67, at this point you would have 1,000 shares. Now this time the trade actually worked, and so the question would be, where would you get your full position? One of two things are going to happen. Either after this hard down move, you're going to have a retracement and some type of consolidation where you see it clearly holding. In this case, you actually saw that, and this actually worked pretty well. You had the hard down move, and we came back up. The spike high here was 118.64. You want it to be short after a consolidation here as long as we held below this 118.67. Why is that important? I'm going to zoom out for you again. It was important because in the morning when we were going to the 119.25, we pulled back to 118.67. We went up to 119.25, we pulled back, we dropped it by a penny or two, but we're immediately back above. Once you have a hard down move below this support level, there are more people trapped. Believe it or not, there's actually people yesterday with the strength, they were getting long in the market, and when they saw it wasn't breaking down and consolidating at the highs, they got long. They weren't as concerned about the context of that we'd come up so quickly from 113 over the prior 2 days. They said, you know what, the market's strong, we're consolidating at the highs, For all I know, we're going to 120.50 or 122. Those people are very confident and very comfortable until they see this down move here to about 118.30. What they're waiting for to get out of their positions generally is they're watching the market pop back up, and if it doesn't take out this 118.67 and starts another down move, then they start to hit the panic button. So this is your spot right here in this consolidation. Either you're going to be adding to your position at 118.65 or so, or to this next hard down move below 118.25, the prior low. My trading style, I'm probably hitting into this. I've got my quarter and my quarter positions here. I'm probably not going to get full size until I see this next hard down move and it takes out 118.25. It's a little bit risky to add that final 50% here, in the sense that maybe it'll then retrace back up to 60. But in that case, if my last piece is a momentum lot, I'll take it out, and maybe I won't have my full position for the down move. But in this case, it actually unfolded perfectly. It had the hard down move. It never got above 118.20, and then you had your hard down. You had your move all the way down to 117. This. That way of approaching the trade, and there, by the way, I saw 3, 4, 5 people on the desk actually did a really nice job. They waited for the weakness and they traded into this down move, and some people did a really nice job in the SPYs, some people in the VIX, some other market stocks. They took advantage of it, and then this was the 4th or maybe the 5th really big move into the close out of the last 7 trading days. And we know that the down moves generally are going to be bigger than the up moves. The up moves we've seen have been in the 0.25 to 0.5 range. This down move was, it was about 2 points really from 119, from right about here where we came down, we consolidated, and this was kind of the downtrend started. It was a little bit over 2, actually about 2.5 points from 119.20 to 116.80. And what you're doing there is, by putting on these quarter positions, is you're not getting emotionally involved because you're going to keep your losses de minimis. You're not going to add that extra 25% until you're probably at least a half point in the money and you have momentum on your side, and if that second piece doesn't work, you can get out of it fairly quickly. And you're not going to add that final 50% until, this case, you're almost you're a point in the money down here. You've seen the uptrend broken, and you've seen this final hard down move, which then led to, and look, if you're adding your final piece here on the break of 118.25, the market went down another 1.5. So you didn't have to have that much of a position until the market had really shown you a lot of weakness and you're already up a bunch of money from your initial piece and your second piece. That's the way you're going to trade it. The one final thing here, which I didn't talk about yet, is we have to pay attention. We have to pay attention to the pre-market as well. Pre-market supported here, and this is another thing right here at 118.11, and we have this pre-market uptrend. We tried to break down here at 118.11. This move right here, we noticed, took us right through this pre-market support, and then our final confirmation for the weakness of the day was the pre-market low, which I can't seem to draw a line here, which was right around 117.85. So in other words, even if you didn't short into all these down moves here and you were the last person who wanted to get involved in this trend, a lot of times we'll say to our traders, don't get involved late in the move. You're trading some in-play stock. It's already had 3 up legs. In the case right here, if you decided to get short below 117.80, even though you didn't get in on the break below 119 or the break below 118.67 or even this hard down move below 118.25, I actually don't have a problem with you getting in on the move below 117.80, because even more people are trapped now because the pre-market lows are taken out. Anybody who is looking at pre-market support says, oh my God, they're going to throw in the towel. And the real next support is not till 116.30, technically, is where we could have gone down to. Right here, which is where we ran up to the close on Monday, which is 116.30 to 116.40. So even if you were getting on the break of 117.80 here, that's still a 1.5 away from the gap fill. And I think if you've been watching the market for the last couple of months, on the downside, the market can fill gaps once it gets going. And in fact, I think that the best example of that is if we zoom out again into the 7-day. We had this hard down move from 119 to 116.30, and again, this is why this level, it was possible for us to come all the way down here. The next day, we came in, we gapped down to 114 from 116.30, and we went all the way down to 112. So when the market picks up momentum on the downside, we're seeing 3, 4, 5, 6 point moves on the SPYs on the downside, so you never really want to underestimate. So if you see the momentum and you know more and more people with each down move leg are getting trapped, once you take out the pre-market low here, it's pretty much, there's no reason really to buy until you get to this 116.40 area. Now, yeah, we did bounce off 116.80 fine. We came back up to 117.5 or so, but we never even got back above that 117.80. I think maybe that was the high, the spike high, if this is a real print right here. So that's fine. This is a case, final hour, strong trend on the downside, people trapped. You know, you can go in on the third wave or the fourth wave even. You just have to be aware if you're going in on that third and fourth wave that, you know, you got to keep things tight. You risk 10, 15 cents, but you're trying to capture 50 cents to a buck on the next down wave. I'm happy to take any questions on the recent SPY action, the topic we just talked about. The main takeaway for this is you have an opinion, you wait for the trade to develop, you can nibble with your opinion. It's okay to nibble. When you see weakness here, or weakness here, or weakness here, you nibble, but you don't get big until you see confirmation. And that way you're in a position of strength when the trade starts working. You're not down in a big hole saying, damn, I'm trying to claw my way back to positive. Maybe you're in a little bit of hole, maybe you're flat, maybe you're even up a little from, you know, I was actually up money coming into the middle of the day, short, trading the SPYs on the short side, primarily. And the main reason I didn't want to trade them long was I thought the upside for the day was 119.60. And why am I getting long with 60 cents of upside with 3 points of downside? It just, the risk reward didn't make sense to me, and that's why I tweeted, don't get long on the SPYs, risk reward doesn't make sense. So that's it. That is... Spiro wants to know what video source program I use to stream. Spiro, I use multiple programs. I use VidBlaster, which shows all sorts of different things. So if you actually called in on a Skype to me, we could show your picture up there. Maybe we'll try that one time, and then we can talk about one of your trades. And then after VidBlaster, I use Adobe Flash Media Encoder, which is what we use to actually stream and record the program. And then, because Ustream, for whatever reason, despite the fact that we pay them a ton of money every month to stream the show, makes me not only use those two programs, but then I have to go to their program and hit stream and record and all these other things. And that final piece is generally what screws up the program. And Sam is looking back at me like, what are you talking about? So there you have it. I'm going to call this a show today. I really wanted to mainly just focus on this topic, and it's such an important topic because, especially for younger traders, newer traders, where you have this bias. If you have a bias, then nibble. But when the price action starts to confirm your bias, that's when you want to be most aggressive. And maybe next time we'll talk about when I come in with a bias and the price action does the opposite of what I think, how to use that to your advantage as well. So thanks for joining us again. I think going forward in the future, I think we're good to go in terms of these broadcasts running a little bit more smoothly in terms of the technology. So we'll be with you next time on Friday, and thanks for joining us. Was the video quality better this time?
Yeah.
Okay. I think I got it. It's really like clean?
Yeah.
Okay, cool. I was able to stop it, but my computer is frozen now. But I was able to achieve stopping the broadcast. What's that?